Is this the top?
In the top, absolutely not. Not in the least.
It's a historic week for the world, but historic today for the metals. Gold finally briefly touched $5,000 an ounce, the historic $5,000 number, and silver reaches $100 for the first time in history. Triple digits silver. We got that today on January 23rd, 2026. Gary Wagner joins us today. He's the editor of thegoldforecast.com, and he's going to tell us what's next, what's happening, and where our price is headed from here. Gary, I couldn't think of a better day to have you on, my friend. Welcome back.
Thank you. Likewise. I am so excited that we're witnessing fruition of what many analysts, including myself, have been predicting for months, if not the latter part of last year. Historical times. And it's almost the boy that cried wolf, because yesterday, historical times, gold breaches 4,900. Earlier, gold breaches 4,800. But our target has been $5,000 per ounce. That's unheard of. If I asked you at the beginning of last year, would gold hit $5,000 within a year? I don't know what you would say, but I know that I wouldn't have predicted it, not till we saw it really start to move throughout the year.
Let's just break that down. What are the key assumptions that maybe you missed? Because gold and silver ran faster than most people have predicted this year, including yourself. I mean, you got the direction right. You've made a number of correct calls on my show. People can check out our last interview down below. And you called a number of key targets. You did not call $5,000 gold by January 2026. It went way past your expectations. Why not?
Well, I did believe that gold had the potential and was going to inevitably hit that price point. In fact, I think that if we look historically, gold, like real estate, will continue to rise throughout the year. But this year, I would not have called it. Simply put, all of the variables needed to really ramp up uncertainty in this world, whether it's politics in the U.S., geopolitical strife, inflation being persistent, the current action by the Department of Justice to indict Powell. All of these things, if I thought they would coalesce at one time, I might have had a clue that it would accelerate, but I did not. And the reason is I didn't think we would see this many variables coalesce in one time instance. And we've seen that over the last, say, 3 to 4 months. And that's when we really saw gold accelerate, silver accelerate. The uncertainty has come up. When you think about the geopolitical climate, yes, we do have what's going on in Iran. The Israeli-Gaza war is still in play, but it's not really in the news cycle. Ukraine and Russia, that's 4 years going. That's not new news. So what's happening now are new things in the political world, geopolitics internationally. That's what I don't believe many analysts caught in terms of that coalescence in this short of a time span.
All right, I want to get your reaction to a few clips, and then we'll get to the charts. So,
sure.
And then, by the way, if you're watching this below, comment down below what you think is going to happen to gold and silver next. Do you think this is the topping phase of gold and silver at $100 for silver and $5,000 for gold? Or is this just going to spur more buying and more momentum? Comment down below. Take a listen to what Ray Dalio had to say at the World Economic Forum in Davos this week.
You've been talking for a long time about a breakdown in the world, a breakdown in societies. Joe had asked you, are we there yet? And you said, yeah, we're here.
Let's step back from the sensational and be clear about what I mean. The monetary order is breaking down. What I mean by the monetary order is fiat currencies and debt as a storehold of wealth is not being held by central banks in the same way. The biggest market to move last year was the gold market, far better than the tech markets, right, and so on. And the U.S. markets underperformed foreign markets because of the fact You could see it in the numbers of the central banks and so on. So let's just look at the fact that on the other side of trade deficits and trade wars are capital and capital wars. Is you look at what is happening and why it's happening and who's buying it. Let's just take a moment on that capital war issue, okay? We know that both the holders of US dollar denominated debt, which is money, and those who need it, the United States, are worried about each other, right? So if you have other countries who are holding it and they're worried about each other and we're producing a lot of it, that's a big issue, right? So you have to explain what is going on with fiat currencies, generally speaking.
By the way, he also wrote on Twitter, X, a couple months back in 2025, that he thinks that a return to a gold standard is not out of the question in the next decade or in our lifetime. So let's just comment on what you heard just now, Gary.
Well, first, that's why Ray Dalio is Ray Dalio and is the man. He's brilliant, and he picked up on something that I am interpreting a little bit differently, but it's all based on what he just said. All of us have come to a conclusion that fiat currency can't last forever and it's going to have dramatic implications. But what he talked about wasn't consumers' sentiment about fiat currency and the fact that, excuse me, the buying power each year is less and less and less. You know, I've been around for a while. I remember candy bars at a nickel. They certainly aren't that now. I remember automobiles at 10 and 15,000. They're not that. That is a byproduct, a direct byproduct of fiat currency because the buying power goes down. 100% of what he said, I absolutely agree. But what I would like to add to that is that, or expand on that, excuse me, is the role of central banks and their purchases over this last year. China has been exceedingly aggressive. Poland, exceedingly aggressive. All of the central banks have been large buyers of gold, and he explained it. In other words, he's not saying that consumers feel fiat currency is going down the drain, so to speak. What he's saying is that it's got a lifespan, and the big money, the capital money, as he put it, that's where they're moving dollars into gold. Why? Fiat currency. And when central banks, supposedly very wise economists in dealing with it, and a country needs to have a store of wealth, and when they decide that the US dollar, which has been the go-to currency since World War II, is really not the best place, and they're switching or moving, allocating more and more dollars into gold, that's a huge statement. And that's what's happening. But even wider than that, I looked at it as central bank purchases. I didn't realize that it's capital. It's the big corporations. They need money, and they're putting their wealth, moving it from dollars, from euros, from whatever currency they work in, into gold. It's huge. It's huge. And it does partially, and for a large part, explain why we've seen this explosion in the price of gold and silver.
Before we continue with the video, let's talk about a company that's building serious gold leverage for the long term. Our sponsor today, Stellar Gold, is sitting on 3 major Canadian projects. Tower and Colamac are among the largest undeveloped gold sites in the country. The Tower project alone could be worth $2.5 billion after tax at a $3,200 gold price assumption. And if prices go higher, so does its value. Colamac spans over 1,000 square kilometers of greenstone deposits and could be Canada's next big gold camp. They also have Hollinger Tailings, a cleanup project that could deliver near-term cash flow. Across all projects, they've drilled over 16 million ounces of gold, which would cost over $2 billion to replicate today. With a seasoned team, Stellar Gold is one company to watch. Scan the QR code here on screen or visit stellargold.com/David Lin to learn more. This is an an article from CNBC earlier this week. Pretty sensational headline. This is Sell America. Yes. U.S. dollar treasury prices tumble. You recall that earlier in the week, not just did treasury yields go down, prices go down, yields went up, but also the Japanese 30-year and 10-year spiked to historic levels as well. But that's a different story. That has implications also for U.S. investors because it's a warning for what's to come for the long end of the curve for the U.S. if the American government doesn't rein in their spending and deficits increase, because that's exactly what's going on with Japan. They're announcing more spending, yields are going up. So the Sell America trade is in full swing Tuesday morning. Bond prices tumbled, strong, sending yields spiking. The dollar index went down. This is Sell America again within a much broader global risk off, said a strategist at Evercore ISI. And the article goes down to comment on gold and silver reaching new highs as a reaction to this Sell America sentiment. Is that true? Is that what's going on, Gary?
Well, it's a little different than what Ray talked about in terms of fiat currency. I believe that the Sell America and Sell dollars is international countries and citizens reacting in a negative way to recent actions about Greenland, about other things, but they don't feel comfortable right now about what our country is doing, and it's really the administration has alienated many countries. And whether you love Trump or dislike him, you have to acknowledge that he has been alienating nations with some of his actions.
Which may be good for gold, is what we're trying to say.
Well, we'll talk about that. Yeah. It's been great for gold, but the whole thing is this Sell dollars and Sell America is a protest with international dollars coming from countries, international corporations or corporations outside of the U.S., as well as citizens of the world, not in America, peacefully protesting with their wallet. That's what I think the Sell America is all about.
Let's flip over to the charts now and put all this context into action for our viewers, and let's take a look at what is going to happen next. And I'll just start with my the question that I, as somebody viewing the markets, would have is this the top? That's the first thing that I'm looking at and thinking about to myself. $100 for silver, you'd expect strong resistance, and we have resistance for several days. Now that we've got $101 now, you'd expect a lot of selling pressure. Is that what's going on?
The question is this the top? My answer is categorically not in the least. Now, if you look at silver right now and the chart that I've got up, are you able to see that, David?
Yeah.
Okay, we've got March silver futures and then April gold futures. Notice that right now, silver is at 102. So it broke 100 and it continues to go higher and is in fact at the high of the day. This is a Friday, meaning that the markets will be closed for the weekend when you typically get large institutional traders, professional traders squaring positions to lessen their exposure to what could happen over the weekend. We are not seeing that in gold. My personal feeling is 100 is the new floor in silver. It is certainly not resistance. Certainly not. And that's based on what we're seeing. Gold is a little bit different. Gold traded very close to, and this is a daily, very close to 5,000, but has backed off since. Currently, where is it at? Wow, it's at 88. It had gone down to about 70, and people came in and bought the dip. But there, I believe we could see some shallow correction come in. And even if we have a sizable correction, is 5,000 the top? Absolutely not. You want to buy that dip. Because I think that what the world is reacting to, and Dalio said it so well, talking about a transition out of fiat currencies worldwide. The U.S. dollar is not the only one that's fiat. They all are, I believe, with an exception. I'm not sure if Switzerland is, but they're all fiat. And that time has come to an end. I'm amazed that he said that, but that's resonating with me. Gold inevitably will have 5,000 become support, but maybe not yet. We could see a dip here. We could see a dip on Monday. But what amazes me is that it sold off. This is about 10 o'clock in the morning in Honolulu, meaning it's 3 o'clock in the afternoon. Markets only have a little longer to trade. And the fact that it went down to 70, I guess what we could do, well, I'll do that on the next chart, is look at an intraday chart. But as soon as it touched right around 5,000, it moved down quickly. It lost about $30. If you look at what it did the other day, and I'll blow this up, this is when gold opened at 48.33 and closed at 49.31. But look at the low. The low came in at 47.74. So it hit these highs that truly were just above 4,900, and then it sold off, I believe, $185 in a very short period of time. I think it was 15 minutes or a half hour. It really bang. And rather than that signaling that the fire's been lit, it's time to correct, other traders who've been waiting, because we've seen really now 4 days of parabolic action, the opportunity to buy the dip. And we're kind of seeing that now with gold back up to about 49.90. They sold it off, and that was very, very short-lived. So the excitement's there. We'll go through my calls for the end of the year as well as my calls short-term, but none of my calls short-term in gold look for a sustained level below 5,000 for a protracted amount of time. And I'm looking for higher prices. The question is, will we see a real correction? Because we've seen gold move up tremendously, and we'll talk about that when we look at a long-term chart. But we haven't had a really deep correction. We've had 20, 30% in terms of correction. It trades from $0 to $1 and goes down to 70 cents and then pops back up. But corrections to a market technician can be as deep as 61.8% and still be in a bull trend. So a stock goes from $1 to $2, and then it retraces on that dollar move back down to $1.40, and we say that's bullish. To a technician, it's momentum, and if the momentum doesn't change. So, short answer, is this the top? No.
Well, let's take gold first. From a technician's perspective, $5,000 gold, what's the next, I would say, Fibonacci retracement to the downside and then extension to the upside?
All right, give me a second here. We'll do an extension. And it depends on where we're going to do the extension from. I'm going to do it from November, but you see, you can even go lower than that. But we'll start with this one, which is really where we saw it change, although it was parabolic here, but one step at a time. We're going to do a Fibonacci retracement from 3968. Hold on. From 3968 up to 4990. All right?
Yeah.
We've got a basic, let me get this a little bit more fine-tuned. That's why I wanted to blow it up. A shallow correction would take gold from, call it 5,000. Let's round up $10, okay? A 23.6, considered the most shallow retracement, takes gold just above 4,700 to 4,730. A deeper correction, but still considered shallow, 45.74. A deep correction takes gold to 4,300. So when you have a market that has run up so quickly in such a short period of time, the correction numbers are still going to be these ratios, the Fibonacci ratio, 4,700, 45.75, 44, 45, 50%, and then 43. That's a huge, I mean, we're saying that we could have a correction to 4,500, roughly $500 from here, and it would be exceedingly bullish if we saw it go to that point and have that V or pivot. And that's a shallow correction, David. Gold could correct on a technical basis, that is, to around 4,300. And as long as it pivots, in other words, it goes there, it forms a base, it consolidates. And these are rough numbers. It can go 10, 20, 30 above or below. And then we get that V and it starts moving back up. It's still in a bullish trend according to technical studies and the way we interpret price movement over time.
What's the upside then from $5,000? How much upside do we have here? And I think if you want to take a look at how gold has performed from the trough in 2023 all the way up until now, that might give you an indicator as to how much room we have left to climb. If you take into account that it's climbed even more in prior bull cycles. If you take the 10-year bull cycle, Gary, from let's say 2003 to 2011, or just 2001 to 2011, that on a percentage change basis is still higher than what we got now.
Okay, so let's go back to, as you said, 2023. I'll leave that one up. Let me take this off so it's a little bit clearer.
While you fix your lines, I'm just going to briefly show my screen and I'll switch back to yours. So 2023.
Do you want mine off or?
Oh, no, keep it on. I'm going to switch back to yours in just a minute. So we're at basically 200% gain from 2023. But if you look at gold from 2000 to 2011, that's a 650% gain from over, obviously that's, a longer time period, 10 years. We're looking at 9 to 10 years, and gold's gone up 200% in just a span of 2.5 years in this particular bull cycle. But that just goes to show that prior bull cycles have even a greater magnitude of rally. So back to you, Gary.
All right. Well, what I want to basically do is, in terms of gains, because I took it back to 2023, but I'm starting it really from October, because that was, if you notice that in March 2022, it was still coming down. This was that bottom. So the bottom was really at 1584, okay? Up to current pricing, that is a 209% gain. That is a gain of, oh God, is it really? I mean, these numbers fascinate me. Could it really be? And it is. That's a gain of $3,367 in the time span of 3 years. Incredible. What we have to acknowledge is we saw a very nice but steady move from down here. I'm going to round up to 1,600. Then it hit 2,000 and kind of stabilized there. 2,000 from March of 2023 up to February 2024. And then it had that nice controlled move up to 2,700, came back down to about 2,500. But if you look at the tack, the angle of these rallies, this rally is much steeper of an angle than this rally. This rally actually really begins to accelerate from 2,600 in December 2024 up to 3,400 in April 2025. And this was the last real period of consolidation from last week of April
to
August. And then things changed, because then we saw an almost parabolic move. And I've converted this to a weekly so that we can fit things easier. We did get a little dip here from a high of 4,400 down to about 4,000. If you look at the lows, 3,900. This is the largest correction that we saw within the last 3 years. And then it just moved higher. Solid green candles. You have one strong red candle. And even though that's a weekly, that's all in one day. I believe that was the last day of December when it lost. Let's pull it up. Right here, when gold lost $285. The only other time recently that we've seen that was on my birthday, October the 21st.
Oh, everybody mark that down their calendars.
Yeah, okay, yeah, sure. But you can see that after these series of small body candles and Japanese candlesticks, these are called dojis, it means there's indecision in the market. Neither the bullish faction or the bearish faction have absolute control. It is what the Eastern trader, the Japanese trader, those in Southeast Asia and China use to determine when a pivot is possible from bullish to bearish. And what we got was we did have this real quick but actual correction, and then it was off to the races. If we look at, and these are dailies, we've gone parabolic for the last 4 days. So incredible moves.
All right, let's move on to silver then. Actually, before we do silver, just give us a target, upside target for gold. What can we expect in 2026?
Absolutely. I'm going to break this down to short term and by the end of the year.
Yeah.
Short term, I'm looking at between 5,100, more likely 5,200 to 5,250. Short term, I'm talking about before the end of this quarter. I don't want to use time because every time almost all of us analysts talk about time, we get it wrong. The market could go to a normal pace, and that's what I'm anticipating these numbers on, but it could happen in 2 or 3 weeks. I'm still going to say I feel that's less likely, but I'm going to say first quarter of this year, easily see that. And that could be with a correction in gold because the first quarter has time to recover. But I think this is in the next month to 2 months. Long term, my target at the end of the year, drum roll, is at minimum $6,000 per ounce, at minimum. And when you hear other people coming out calling for 7,000, and these are respectable houses, they're not what we'll call the tinfoil hat analysts that were calling for 10,000 gold 10 years ago. These are strong. Who called for 7,000, David?
Let me find that for you. I don't know off the top of my head.
It was like Merrill Lynch or Goldman Sachs, or I think it was Gold. But it was a major institutional house that's highly respected, is what I'm saying. And they're calling for 7,000. I am known as a
ICBC. It was ICBC Standard Bank.
Okay. I'm looking by the end of the year to go to 6,000. And that's taking into an account that we should have a real correction. But if we look at the market historically, we have not. Not this year. Not recently. And if all things being equal, that's what I'm looking at.
Okay. All right. Gary, let's get the same analysis for silver, your upside targets for the year.
Okay. Short term again. My short term target is about $115. I believe that we could see it dip a little bit below intraday, but I don't see a correction coming in with silver in the same way that it's possible with gold if the professionals really want to pull profits. I think that anyone initiating a short right now is willing to go in front onto a railroad track, stand in that track and watch the train heading towards them at 60 miles an hour and think they can play chicken. But markets also go down when institutional or large positions are liquidated. You have to sell to do that. And that would be more likely to me in gold and even in silver. But I think that silver is such a hot commodity because for a couple reasons. Gold is pricey now. And for the average investor who wants to buy and get involved in the precious metals, they're much more comfortable looking at silver even at 100 an ounce than they are at gold at 5,000. They feel like they're getting bang for the buck. They're able to buy incrementally with actual 1 ounce rounds, as opposed to if you get a tenth of an ounce for $400 in gold, it's like a dime. It's not that much. They want to see it. The one thing about the metals is it's something you can hold, touch, and accumulate. That's my short-term target. In terms of my end-of-year target, the way we've seen it explode, I'm looking for 160 to 180 by the end of 2026.
Let's end it here. Excellent calls throughout the year. Last year, Gary, so congratulations on
Thank you.
Getting a lot of the levels right and the direction right, although this recent rally surprised everybody. But let's see what happens the rest of the year. You do have a promotion that you want to tell us about. So tell us where we can find your work and tell us about this promotion that's pretty unique.
Thank you so much for honoring that. To find any of my work, thegoldforecast.com. Our premium subscribers have access to all of our videos, current ones. Our non-subscribers can go on our site or our YouTube channel and look at everything. I believe the cutoff is about 2 weeks. Once it's 2 weeks old, we put it in the public domain. I believe that we are witnessing historical times. I believe that every investor worldwide should have their at least a little toe in the precious metals. For those that are first-time investors, my forte has always been futures trading. That might not be the best way to do it. And so what we're doing is we're looking at SLV and GLD. We're looking at the electronically traded funds. We're looking at physical accumulation. We're going to add all of that to our daily show. But I want to offer any new subscriber a 35% discount lifetime off of our premium service. And to do that, go through the site, look at it, thegoldforecast.com, see if you think it might be of value to you. And when you sign up, you'll see a coupon box on the second screen, and you need to type in one word. It's 2 words combined. David Lin. Lin, L-I-N, David, D-A-V-I-D. One word. And then the next screen will apply that discount of 35%. We've never offered a discount this steep. We've never done, for most of our people, a lifetime discount. It's usually for the first year. I don't want that to go away because I believe that everyone that's an investor out there, if you need a little bit more information, you have some understanding, or especially if you've never invested in precious metals, you need to be coached. You need to learn about the do's and the don'ts. I've been doing this since 1983. I was a commodity broker then, 85, a commodity trading advisor, and I started the service in 2009 specifically on gold. I believe that everyone needs to have 10 to 15% of their portfolio in the precious metals, and I believe that those who have not begun to do that need coaching. They don't necessarily want to do it on their own. They don't want to listen to the place they buy it from. And I'm not talking about Kitco or Franklin Miles where they're selling physical gold for a good price. I'm talking about going down to your coin shop or your local pawn shop and asking their opinion. They have a vested interest in pointing you one way or the other. You need the coaching. You need the education. We're going to offer it at a deeply discounted price. I really highly advise you consider it.
Great. We'll put the link down below. Thank you very much, Gary, and appreciate you joining us on this historic day. We'll speak next time.
Thank you for having me.
Thank you for watching. Don't forget to like and subscribe.